So, question 1.11, which of the following statements is or are correct? We are looking for the questions or for the options which are correct. It could be one or it could be more than only one option. So the first one, which is option A, the first one, which is option A, stipulates that a current account deficit on the South African BOP, on the South African balance of payment, is often associated with a surplus balance on the financial account. Already we know when we were taking a look, or if we take a look on the first chapter, which introduces us to the balance of payment. The balance of payment, we know already that it is a statement that records all financial transactions that takes place between a country and its trading partners. Whenever South Africa engages itself into international transactions with other countries, everything is recorded in the balance of payment. The balance of payment at first, on its own, it has sub-accounts, which include the current account, which include the financial accounts, and also non-recorded transactions. So, with regard to the first option, a current account deficit on the South African balance of payments is often associated with a surplus balance on the financial account. So now we are taking a look on the context of South Africa. Do we have at first a current account deficit, which is then associated with a financial account surplus? That is what we need to take into account. The second option, a current account surplus on the South African balance of payments is often associated with a deficit balance on the financial account. The third option, interest rates tend to be lower when the current account is in a deficit and higher when there is a surplus. Donovan, what's your take?
I was just thinking now about statement number C. Because, so if the interest rate tends below when the current account is in deficit, that means our country is in debt.
A country is what?
Why would? So we're saying because obviously if we're saying the interest rates tend to be lower when the current account is in deficit, so that means our BOP is negative.
Yes.
Yeah. And then the second statement they make is that, and higher when there's a surplus. So I tend to agree with that. I say that is true.
You tend to agree with that. Yes, we are simply saying whenever interest rates are lower in South Africa, what impact does it have on the current account? When there are low interest rates, you remember when we did the concept of interest arbitrage. Yes. Whenever interest rates are low, rational investors in South Africa will not invest in South Africa. They will invest abroad, because we are saying abroad is offering the foreign world or the international community is offering interest rates that are quite higher compared to those in South Africa. Okay. So this has an impact on the current account. Money continues to go out of South Africa because we are having rational investors that are not motivated by interest rates that are offered within the domestic economy. So with regard to interest arbitrage, they will tend to invest abroad. Okay, so Donovan has pointed out one option. Let's see if we, okay, maybe you are not yet done. Yes.
No, I've run out of breath now. Now it's finished. I can hand over to my colleagues.
Okay, yes. Okay. Sia, what are you thinking?
Can you hear me, bro?
Yes, I can hear you.
I agree with Donovan, but to a certain extent, but because here I'm looking at which statement is correct. That statement isn't correct. So I tend to follow, because we're focusing on more the BOP as a whole. So we're not looking at arbitrage. So I tend to go with, from my understanding, the current account deficit of Africa balance of BOP is often associated with balance. So I go with A and B, because it can be vice versa. Because of BOP, in BOP we're dealing with those two accounts, and the third account, which is that capital account. So I tend to group those two, because in my understanding, it's vice versa as well. So if there's a deficit, if there's a surplus in the current account, then the financial account will be in deficit, and vice versa.
Okay.
So I go with option A and B.
Option A and B. Okay. So Sia have taken into account the fact that within the concept of the BOP, whenever we have one account which is on a deficit, it means the other account is on a surplus. Is that what you're saying?
Yes.
Okay. So with regard to the first two statements, these first two statements are not only taken into account a theoretical basis, they are taken into account within the context of South Africa. So what we need to know at first, we need to know, does South Africa experience a current account deficit, or does it experience a current account surplus? At first, that is important. With regard to the balance of payment of South Africa, when we take into account the current account, do we experience a deficit, or do we experience a surplus? That is what you are supposed to take into account at first. So the South African BOP balance is actually on a surplus side. The current account balance of South Africa is actually on a surplus side. South Africa current account recorded a surplus of 4.4 billion USD in September 2020. So already you now have a pointer. Already you now have a pointer. We are not on a deficit side when we consider the current account. Okay. If we take into account the theoretical basis itself, we do not go a step further to consider South Africa. We have many countries that experience deficits on all sub-accounts. Okay. That would be on a theoretical basis. So with regard to the contextual basis of South Africa itself, our current account is on a surplus side. So already we can point out B. And we also experience a deficit on the financial account, okay? So that will also give you a leeway. According to what Donovan have also explained, when we take into account interest rates, we want to go a step further on how interest rates would then have an impact on the exports and imports of goods and services, as well as when we consider interest arbitrage. if interest rates tend to be lower, interest rates tend to be lower when the current account is in a deficit and higher when we are in a surplus. We did take into account, we borrowed an important concept to say, no, if interest rates tend to be lower, what happens when we consider rational investors? They want more relative to less. At the end of the day, money will go out of South Africa because they are motivated with higher interest relative to low interest, okay? So, anyone who wants to make a suggestion? Okay. So, on my side, I selected B and C to be the answers, okay? B and C, a current account surplus, already we did so that. And the other one, interest rates tend to be lower, okay? So on my account, I chose option B and C. Okay, let's take a look on question 112. Which of the following statements is or are correct? Okay, so from this question, you can see it is referring us to somewhere. The value of net gold exports were higher in 2009 than in 2002. It means we are supposed to refer somewhere where we can get that information, okay? So question 1.12, we refer it to the study guide, okay? So before we go to the study guide, option A is saying the value of net exports were higher in 2009 than in 2002. Okay, so I'm looking for, okay, so this one is what we are supposed to use. Unfortunately, let me see if I'm able to, but I don't think I'm able to do that. I want to turn the pages. How can I do that? How can I do that? Okay, I don't see where I can, but I
just
think
press rotate. Just press rotate on your tools there.
Rotate. Okay, there. Let me see. Exact. Oh, thank you. Okay, so the first option, the value of net gold exports were higher in 2009 than in 2002. Let's take a look where are net gold exports. The value of net gold exports. These are our net gold exports, okay? These are our net gold exports. Which means we are supposed to follow this one, okay? So it is saying the value of net gold exports was higher in 2009 than in 2002. It was higher in 2009. In 2009, we have 52,776 than in 2002. In 2002, we have 43,643. Is this correct or not?
That is correct.
That is correct. Option A so far. B, there is a declining trend in the relative contribution of gold exports to the balance of payment. The balance of payment as a whole, is there a declining trend of the contribution of net gold exports? Okay, so we need to take into account the net gold exports how are they contributing to the BOP as a whole? Does it show a declining trend, or does it show an increasing trend? So we can see 43, 32, 28, it's going down, 27, it's going down,
There's an increasing trend there.
35, 39, this is an increasing trend, okay? So this becomes incorrect because it is saying there is a declining trend. Option C, in 1998, gold exports comprised nearly half of all merchandise exports. In 1998, gold exports comprised nearly half of all merchandise exports. Let's take a look. We do not have 1998 here. Okay, we are starting from 2002.
So Ralph, would that technically, am I right in understanding that would be somewhat a trick question?
That would be, they are trying to play around with your mind.
Yes, sneaky, eh?
Yes, they are trying to be clever. We do not have 1998. So at the end of the day, which one is our answer here?
Only A, so number one.
Only A, number one, is our answer, okay? Okay, 1.13. Suppose the rand per dollar exchange rate is 18 rand per dollar. This one is an exchange rate. You are using 18 rand to purchase 1 USD on Monday. You are also using 1 USD to purchase 18 rand. Okay, we just take a look on it vice versa, okay? On Monday, the following Wednesday, it is 19 rand per dollar. And by Friday, it is again 18 rand per dollar. Which of the following statements is or are correct? 1, option A, arbitrage can take place without any profit. Option B, the rand will depreciate against the pound. Option C, the changes in the exchange rate are the result of uncovered interest arbitrage. This one is a very simple question. Evelyn, what are you thinking? Wendell?
I'm still applying.
Donovan?
So by trial and error, B is irrelevant because we're not talking about the pound. We're talking about the US dollar, so that's gone.
There is no pound here.
Yeah.
So it's out.
And now, exactly, yeah. And now it becomes a bit tricky with A and C. So A, I do like, because arbitrage can take place without any profit, because we've started at 18, it depreciated through to 19, and then appreciated back to 18 within a week. So if I understand correctly, there was actually no real profit gain. Well, depending on the traders, if they did move quickly. But then number C says the changes in the exchange rate are the result of an uncovered interest arbitrage. I'm not so sure about that. That one is a bit foggy for me.
Okay, so which one are you selecting, Donovan? You say, so which one is your answer?
Ish, you're pushing me for an answer. Eh?
Yes, we want to compare.
Okay, I will go for option A only.
Option A only. That one is number 5, right? Okay, Donovan went for 5. Okay.
Yeah, that's correct.
Anyone who is supporting or who is going against Donovan?
I'll go against Donovan. I will say option 1, none of above. None of the statements is correct.
Why? The why part is very important.
I'm going back a little bit because I've been mixing the two. Because I'm doing trade on the one side and then I'm doing finance on the other side. With uncovered, Ralph, I'll have to come back to you about that. I know I should explain because I know with understanding of uncovered arbitrage, I knew it was about my thinking behind it was because of the uncovered arbitrage and the arbitrage. It's just I just can't remember when I did the why it was, but I went with the none of above. I'll come back to you and apologize.
Okay, it's fine. Evelyn, today you are very quiet. Wendell?
Seeing is my first class, I'd just like to listen today.
Okay.
I'll add in where I can, but yeah.
Okay, it's fine. Okay, it's fine. So, Donovan, arbitrage can take place without any profit. First, what is arbitrage?
So that has been 2 exchanges when you can buy the forex from one exchange and then sell it on another exchange when the price has not been corrected yet. So by doing so, it'll bring it back up to a balance. So long story short, you can buy on one exchange and sell on another.
So arbitrage, we take into account the concept of where. Okay, this statement is referring to when. When this is speculation. Okay, where is whereby you buy a currency where it is cheaper and then you sell it where it is expensive. It means we now have 2 places. Ne? You buy it in Cape Town, you then go and sell it in Johannesburg. That is arbitrage, Donovan. Eh? That is arbitrage. Yeah. But this statement does not refer us to any place. We have 2 monetary centers. For arbitrage to take place, it means we must first have 2 monetary centers.
Okay.
And we do not have that in such kind of a statement. In this kind of a statement, it is simply referring us to a speculator. A speculator buys it when it is cheaper and sell it when it is expensive. Do we have any option that is referring us to a speculator here? No. And it cannot be uncovered interest arbitrage. Uncovered interest arbitrage is the same as the one that we referred to earlier when we said interest arbitrage simply takes into account when you see that in Botswana is offering higher levels of interest compared to what South Africa is offering. It becomes uncovered when you decide not to enter into a forward contract.
That will be the swaps, right?
Sorry, that will
be currencies. That'll be. It's also called the currency swaps, Ralph?
Currency swaps.
Yes.
Not currency swaps. Not currency swaps. Not currency swaps. Not currency swaps. Currency swaps is whereby you go to FNB. FNB, I'm selling you 200 Botswana Pula today. but on the 31st of August 2021, I'm coming back to buy the same currency. Okay, you enter into a contract today, you sell your foreign currency, you also enter into that contract to say at some point in time, I'm coming to buy back the Botswana pula. Maybe your transactions are much more engaged in foreign currency. Okay, those are currency swaps now.
Okay.
So we do not have interest here on this statement. So option 1 becomes our answer. Okay. (1.14). Which of the following statements is or are correct with reference to Fig 16.1 in the prescribed textbook? Fig 16.1 in the prescribed textbook. Okay, this is Fig 16.1 that we want to refer to. So, what is it saying first? Okay, where's the question paper? Okay. Which of the following statements is or are correct with reference to Fig 16.1 in the prescribed textbook? At E, the quantity of euros supplied equals the quantity of dollars supplied. At E, the quantity of euros equals the quantity of dollars supplied. That is the first option. At E prime, the quantity of euros supplied equals the quantity of dollars supplied. That is at E prime. Where is E prime? This one. The quantity of dollars supplied equals the quantity of euros supplied. That's what it is saying. C, the vertical axis indicates the exchange rate. The vertical axis indicates the exchange rate. What do you think?
Option 3.
You say 3. The vertical axis indicates the exchange rate. The vertical axis.
I support.
You support, is it Donovan?
Yeah, sorry, Ralph. Donovan, yeah, I support, yeah.
Yes, Donovan supports. This represents the exchange rate. Remember, Donovan, when we said this R does not stand for the rand, it simply denotes the exchange rate between the USD and the euro. Okay, those are the options that we are having to say at E, the quantity of euros supplied equals the quantity of dollars, and the other one, E prime, which states that the quantity of euros supplied equals the quantity of dollars supplied. These two does not make sense. This is the supply for what? For what? Which currency is this one?
For euros.
This is the demand for what?
Pound, sorry. Pound.
No, that's correct. Euro is correct. You're right. Yeah.
Those the euros. I'm looking at. I'm like staring at this moment. Thanks, Doctor.
No, this one.
I'm like staring at.
This one is for.
My nose to the screen.
This one is for the euro.
Yeah.
For a pound, it's just like an F. Yeah, just like that. Okay. So
yeah,
An equilibrium is reached when the demand and supply curve of euro is equal. We cannot say the demand for bread, we cannot say the supply for bread and the demand for tomatoes will give us an equilibrium price. It will give us an equilibrium price of what? So only the supply of bread and the demand of the bread will give us the equilibrium price of bread. We cannot mix the two. Okay. And you have to take note that this is our referral currency. Our referral currency is the currency that we also include within the diagram. Okay. So for us to have an equilibrium from ECS3701, we said equilibrium price of bread is equal to the demand of bread and the supply of bread. So it's the same analysis that we just borrow, only that we are applying that analysis in the Forex market. So we cannot mix the supply of pound and the demand for euro. It does not make sense at the end of the day, okay? So all of those two does not make sense, and then we are only left with this one, okay? Okay. Which of the following statements is or are correct in an unstable foreign exchange market? A disturbance from equilibrium pushes the exchange rate further away from equilibrium. We did this. B, the supply curve of foreign exchange is negatively sloped and more elastic than the demand curve. C, a flexible exchange rate system increases the balance of payment disequilibrium. What do you think?